Hello, and we have some exciting news for you. Amidst all the Bitcoin pumping and the buying, there is even more big buying news, and it comes from, you guessed it, folks, BlackRock. The BlackRockiness of BlackRock has decided to file with the SEC to purchase more Bitcoin for its SIO fund. What is the SIO fund? It stands for Strategic Income Opportunity. It's strategic to invest in Bitcoin because number goes up. It's income because it's lots of green money, and it's opportunity because if you don't take the opportunity, they're going to be poor. So, strategic income opportunity. Now, what is the strategic income opportunity fund? It is a $36 billion fund. Now, there's been reports that BlackRock, through this fund, is going to purchase $36 billion worth of Bitcoin. That is wrong. And that is not your strategic income opportunity if you think that's what they said. The entire fund is indeed $36 billion, and they're not going to use 100% of the fund to buy Bitcoin, even though we wish that to be the case. Now, how much of the fund are they going to use to buy Bitcoin? I don't really know, but it's probably going to be several $billion. And let's not forget, BlackRock has about $10 billion, well, $7 billion, I believe, already in the Bitcoin ETFs, but that's from the customers, and they want to buy Bitcoin with this fund. So this just inflates the amount of Bitcoin they want to buy, which means that puts more demand on Bitcoin. And that combined with the fact that miners only mine about 900 Bitcoin a day, and there's already tens of thousands in outtake per day from Bitcoin, that's just going to squeeze the supply-demand equation some more, and that's definitely going to cause a spike in the price of Bitcoin sooner rather than later. And the Bitcoin ETF price has honestly affected, Bitcoin ETFs have affected the Bitcoin price much faster than I thought. Broken all the Fibonacci replacements, made pretty much all the TA useless for Bitcoin right now, because most of the TA people did not believe we would actually reach an all-time high before the halving, and it looks like we're surging towards it this week. If not this week, then next week. We're just a couple hundred points from it. And now they are all obviously revising their guesses to say that we're going to bounce down at 74, 75K, which could definitely be possible, but it's probably going to be a short bounce down before we go above that again. However, we are only about, a month and a half to the halving. So how much we're going to be over the all-time high at the halving, we don't know, and I don't really expect it to stop at around the halving. Now, TA and stuff is great when there's pull back and forth, but when there's just pure buy-ins after buy-ins from the ETF that nothing can stop, it becomes a little bit more tenuous because people the customers buying these ETFs and these institutions buying these ETFs, they really don't care about your charts or your resistances or supports, and they have enough buying power in terms of money to actually break all those supports, and that's exactly what they're doing right now. And, all the other rumors and all the other reasons, halvings before, talking about, X company's going to invest in this, X company's invest in that. A lot of that is just, theoretical. What's not theoretical is the fact that people are actually buying Bitcoin ETFs with hard cash. BlackRock has to match, and Fidelity has to match 1-to-1. And when there's those hard buys, none of the other theoretical stuff, none of the technical analysis or any of that matters because nothing can actually stop that. The only way we're actually going to go down a large amount is if we have people stop buying the ETFs, if they just plain run out of money, which isn't happening because the NASDAQ pretty much is at an all-time high as well. Or somehow magically the government puts a clamp on the ETF. But since they've already allowed the ETF, that is not likely to happen at all. So a lot of this TA you can basically just throw out the window at this point and just look at the inflows versus outflows on the ETFs and see when this year, if this year they actually start to turn negative for a longer term. Because as long as that doesn't happen, you're probably not going to get too much selling or a giant sell-off because there's too many people wanting to lap it back up. So look at the AUMs for BlackRock, Fidelity, etc. If the AUMs for those things keep going up, then we're continuing to go up, which is exactly what's happening right now. And that's why this cycle is so different from the last, because people are still trying to superimpose cycle on top of cycle and think that every 4-year cycle works the same. But this year's broken all the rules because we really aren't getting any kind of pre-halving dump. We're going to get to the all-time high before the halving. The year before the halving didn't result a pump and then dump at the end of the year, but it was pretty low for most of the year, and then it suddenly came up at the end. So this year has this cycle has basically behaved very much differently from the last, and it's because of these ETFs. So no, we don't really need to mimic the last cycle. Will there still be a 4-year cycle? Maybe. Will there be an extended cycle this time? Maybe, if the funds continue to be hot. And especially if other countries like the Middle East start to come into these funds, because nothing can really counteract hard buys, like hard money buys of Bitcoin. There's really not much you can be like, oh, my TA says this and the Fibonacci level says this. That's all completely like nonsense in the face of billions and billions of dollars worth of buys at this point. That's why like none of the other, like the 53K level, the 56 level, 57K level, all those levels completely melted once people got their hands on the shiny new fund that they've literally been waiting for 6 years since 2018. So this is why the cycle is so different from the last, because the last cycle, there weren't like billions of dollars of hard institutional buys. And this year there are billions of dollars worth of hard institutional buys. And theoretical lines and colorful charts aren't going to counter hard money buys of the ETF, and which equate to hard money buys of Bitcoin. Because it ultimately comes down to a tug of war between supply and demand. And right now, demand is way up, and there's nothing kind of like countering the demand right now. I suppose Satoshi Nakamoto could log in and sell his million Bitcoins, but if it's really a combination of Hal Finney, Nick Szabo, Adam Back, and others, and that Marty guy, then the key might have actually been lost already or lost with Finney. So that's what we have right now. There is a new ruling that partially looks to enforce the SEC's position that Bitcoin are securities, but it doesn't really matter, and here's why. So this lawsuit was basically the Coinbase insider traders. The SEC accused them of trading unregistered securities, and the judge gave them that argument. Now, some might say, ooh, it looks like the SEC won. They convinced the judge that people were trading unregistered securities. Here's why that's not the case. First of all, if you guys didn't read, this was a default judgment. What is a default judgment? It's basically like the plaintiffs automatically getting their judgment if the defendant didn't show up to court, which is exactly what happened here. The defendants ran out and did not show up to court, so there was no opposition to the plaintiff, so they got entered a default judgment. This is generally not looked on as a precedent of any sort because the other party didn't really show up to court and there was no real court case. If you don't show up to your court case, then the other party generally gets an instant win on that particular court case. So this is not a big deal, not a big win for the SEC, regardless of how much some people want to make it, especially the SEC people want to make it a very big win with the SEC, just not a big deal at all. And they're basically just trying to make it more than it's worth, at least a lot of these news channels, because I guess they want more drama. I am still very confident in Coinbase in their case, very confident in Binance, and well, maybe not as confident about Binance in their case, but very confident in Kraken in its case. And I do believe secondary market sales will not be securities. And right now, the prices really aren't reflecting on it. Everything's just trying to play catch up to Bitcoin at this point, and some of these coins are still going way up. So, enjoy the gains for right now. Buy a couple of the memes. Sell those memes or buy more good coins later on, or keep buying more memes and try to guess and get that big payout. because I have a feeling that this bull run is going to run up much higher than most of us originally thought, especially if the foreign money starts to come in, because Bitcoin is starting to get more and more mainstream acceptance. And I don't think we've actually even seen the bulk of the buys. Either in terms of these companies or banks or anything else. Because if retirement funds start buying, then it is game over for the bears, because they will be completely slaughtered in droves at that point. So right now, yes, we are going to head above 70K soon. We might get shot down once or twice, and that will last maybe for a week or two at the most before we go up again. So don't be afraid of it right now. The SEC case, that them winning a default judgment doesn't really mean all that much, because that just means the other party didn't really defend themselves in court or didn't show up to court. And there's really not much stopping this right now. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.